Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is January 13, 2023, and today is Friday morning. So looking at the highlights of the day, inflation concerns eases as we get the CPI number coming out yesterday, and the markets respond across the board. But first, looking at the major economic events of today at 5 p.m. South African time. Out of the United States, we have a UoM, University of Michigan Consumer Confidence number coming out. That is an important number, so you do want to know what's coming out. Now, looking at the various markets after yesterday's CPI, US dollar weakens versus the major pairs, specifically the euro and the Japanese yen. Looking at the indices, the Dow Jones and the NASDAQ continue to move upwards. Now looking at commodities, gold trades higher while oil slight gains. And looking at the stocks, the two stocks that gained the most yesterday was JP Morgan and Facebook. Not to mention, lastly, cryptocurrencies, Bitcoin spikes higher as well. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're looking at the Euro USD. Look at that, 108.42. That was the threshold. I mentioned that before. Right here was your threshold at 106 just a couple of days ago. And sure enough, it popped above it and didn't just pop it over 200 pips above it. That's a nice retro move up to the upside. If we jump into the Japanese yen, also breaking that 132 and breaking 130 and going to 128. Now that's an important level for the Japanese yen, and that will mean that we've made pretty much an about face from our V formation. You can see it's like a TP. Okay, we gravitated to 150 and then from 150 down to 128. This is superb volatility, superb characteristic, and you're seeing that quite clearly in the market right now. Now looking at the other major symbols, GBP didn't trade much, and neither did the Aussie dollar, just extending a further gain for the dollar, for the Australian dollar versus the US dollar, but not anything compared to what we're seeing at the euro and the Japanese yen. Now jumping into commodities, gold extends its rally, 1895, getting close to that 1900, touching it yesterday and then retracing. But this is a certainty that it is moving up. We mentioned that as it hit this several levels, I mean, as it wedged higher, I mean, you guys, if you look back at some of my reviews just a couple of weeks ago, when we had this wedge formation, just the end of December, and then, then it just popped. And look at that, from 1827, that's a short trade, okay? This is where it's a 99.99% trade that is making money. Sure enough, that formation, as it grew higher and got that confirmation with the, it's all you've got to do. You don't have to do fancy robotics, fancy acrobatic, with several types of indicators. Just look at the chart and just pay attention to the charts, because this was a layup. 1827 to 1895, a beautiful markup there. Now look at crude oil, did gain a little bit to $78. Like I said, it's between a tight range between $72 and $80 a barrel, and we're not seeing any surprises here, and we're just trading sideways, and it seems to be the case. Now looking at the U.S. markets first, the Dow Jones, nice rally. Now remember, we went into a very tight range for the end of December. Okay, I don't know about a tight range, but it was in a range, about a 500-point range between 33,500 and 33-ish thousand mostly. Okay, as you can see right there, that was 33,000, and then finally breaking above it, using that as a support level, and boom, taking it up. Now we're at the top of the range here. 34,500 is the top of the range. Now I don't believe we'll be breaking out higher necessarily, but we will continue trading in a range, at least for now. Now, when we look at the stocks, they do look like they want to take it higher. Specifically, JP Morgan broke that level on 137. We're still off of our highs for the year of 172, previous year's highs, that is. But it's not as bad as everybody's making it, which is really a very important factor, is that we're seeing an extension here. Now, geopolitically, the war in Ukraine is still going on. It's dragging out. We'll see what's going to happen this May as we're coming out of the winter months. But this is still happening, and this is still trading. Now, looking at the other big stock that moved was Facebook, up to 136. Remember, this was the weakest thing on the board, and now it's kind of like reviving itself. And that's why you've got to stay consistently vigilant when you're trading the markets, because things can change, and they do change, and this is a case in point. So a nice little rally here to 136. We are hitting resistance-ish area. So if you did catch this rally, this may be a level that you want to unload here as we're going into the latter part. Now looking at Bitcoin, look at that spike. I mean, this is very difficult to trade. Okay, this is a news event. This is something, fly hits the wall kind of situation. But what's promising about it is that it's moving again. And if it's moving again, we may see considerable movement in the markets again in it. So keep an eye on this. Natural gas, lastly, breaking down to 366 from $5. That's a decent retracement. Now this is again all tied into what's happening in Ukraine. So this is really an important element to consider as we're going into the latter part of January. This is Fred Razak. I want to wish you guys a great trading day and a beautiful weekend. Thank you.